The IRS just froze $6.3 million in Archewell Foundation accounts. Federal prosecutors in the Central District of California have filed preliminary criminal charges against Prince Harry and Meghan Markle under Title 26 of the United States Code. The charges include tax evasion, filing false tax returns, and wire fraud. Asset seizure warrants were executed this morning. And what started as a routine audit in March 2024 has escalated into what legal experts are calling the most aggressive federal action ever taken against members of a royal family operating in the United States. This isn't about accounting errors or disputed deductions anymore. This is about systematic fraud allegations supported by 187 pages of IRS forensic analysis, sworn statements from former employees, subpoenaed banking records, and recovered communications that prosecutors say show deliberate intent to deceive. Let's start with what the court documents actually say, because the legal framework here is specific and the allegations are detailed. The charges were filed under 3 separate sections of federal law. Section 7201 covers tax evasion and carries maximum penalties of 5 years in federal prison and $250,000 in fines per count. Section 7206 addresses false statements on tax returns with penalties up to 3 years per count. And Title 18 wire fraud provisions apply when fraudulently obtained funds cross state lines through electronic transfers. The indictment lists 7 counts of tax evasion, 4 counts of filing false tax returns, and 3 counts of wire fraud. If convicted on all 14 charges, the theoretical maximum exposure exceeds 60 years in federal prison, though actual sentencing would involve concurrent terms and federal guidelines calculations that reduce that number substantially. What matters more than the theoretical maximum is the prosecutorial decision to pursue criminal charges rather than settling the case through civil penalties. The IRS Criminal Investigation Division pursues fewer than 3,000 cases annually out of millions of audits. Criminal referral happens only when evidence suggests willful violation rather than negligent error. That threshold requires approval from both IRS special agents and Department of Justice prosecutors, creating multiple review layers designed to filter out weak cases. According to sources familiar with the investigation, Archewell's legal team was given multiple opportunities during the audit phase to provide explanations for questionable transactions. The responses they provided were either insufficient or contradicted by documentary evidence that investigators had already secured through subpoenas. That failure to provide credible explanations is what triggered the referral from civil audit to criminal prosecution. The asset seizure executed at 6:47 a.m. Pacific Time this morning froze all Archewell Foundation bank accounts, preventing any transfers or withdrawals while the criminal case proceeds. This is standard procedure in fraud cases where prosecutors believe defendants might attempt to move assets beyond government reach once they understand the severity of the charges. Now let's examine what the IRS actually found, because the evidence supporting these charges comes from multiple independent streams that prosecutors will argue establish a systematic pattern rather than isolated mistakes. The audit findings span tax years 2020 through 2023 and examine every donation received, every expense claimed, and every deduction taken. IRS forensic accountants identified specific transactions they characterized as fraudulent based on the gap between what was reported on tax filings and what actually occurred. The first major category involves what prosecutors call phantom charitable programs. These are initiatives that were reported on tax returns as active programs, receiving substantial funding, but that investigators determined never existed in operational form. Archewell's 2022 tax return reported spending $487,000 on a mental health initiative called Compassion in Action, described as a comprehensive program providing counseling services to underserved communities in Los Angeles County. The return listed 7 partner organizations. IRS investigators contacted all 7. 5 had no record of any partnership with Archewell, had never received funding from the foundation, and had never heard of the Compassion in Action program. The 2 organizations that acknowledged contact with Archewell described participating in a single one-day event that cost approximately $8,000 to produce. That leaves $479,000. That was reported as program spending, but that cannot be accounted for through actual charitable activity. Investigators traced the funds through banking records and discovered wire transfers to Sunshine Sachs Consultants. the public relations firm that represents Harry and Meghan personally. The allegation is that charitable funds were being used to pay for personal reputation management services disguised as program expenses. If you're finding this level of detail valuable, subscribe right now and turn on notifications. This case is moving through federal court, and developments could come at any moment as prosecutors file additional evidence and the defense responds, with motions challenging the charges. Hit the like button if this kind of documented analysis based on actual court filings is what you're looking for, and drop a comment with your genuine reaction, because I want to know whether these allegations surprise you or whether this matches patterns you've been observing for years. The second evidence category involves expense reimbursements that were claimed as charitable activities, but that investigators determined were personal luxury expenditures with no legitimate foundation purpose. American Express records subpoenaed by investigators show that Meghan charged $127,450 to Archewell Foundation credit cards during a 10-day period in August 2023. The charges were at luxury retailers including Loro Piana, Valentino, and Carolina Herrera. The expense report submitted to justify these charges described them as wardrobe expenses for foundation fundraising events. But investigators cross-referenced the dates against Meghan's public schedule and found that no Archewell fundraising events occurred during that period or in the 2 months following the purchases. The clothing appeared at personal events: the Beyoncé concert in Los Angeles on September 4th, a dinner party at Gwyneth Paltrow's home on September 9th. These were social occasions with no connection to Archewell's charitable mission, yet the purchases were charged to foundation accounts and deducted as business expenses on tax returns. Similar patterns emerged with travel expenses. First-class international flights, 5-star hotel accommodations, and private car services were charged to foundation accounts and justified as necessary for building international partnerships. But investigators examining the trips found they coincided with personal vacations and family visits, with no substantive charitable outcomes documented. The third category involves a real estate transaction that prosecutors characterize as fraudulent conversion of charitable assets to personal use. In November 2021, Archewell Foundation purchased a property in Montecito, California, for $2 million. The tax filings describe the property as a community center and event space for foundation programs. The deed was recorded under Archewell Foundation's name, and the purchase was funded entirely through tax-deductible charitable donations. Investigators examining utility bills, security camera footage, and witness statements determined that Harry and Meghan personally occupied the property as a guest house for visiting family members and occasionally for their own use. No community events were ever held there. No programs were operated from the facility. The property functioned exclusively as personal real estate, despite being owned by a charitable foundation and purchased with donors' tax-deductible contributions. When questioned about this during the audit, Archewell's attorneys initially claimed the property was being prepared for eventual program use. But communications evidence recovered through subpoena included a text message from Meghan to a friend in December 2021 describing the property as a wonderful private retreat that they planned to keep for personal use. That text message is the kind of evidence that transforms a disputed interpretation of non-profit regulations into potential criminal fraud. It shows awareness that the property was for personal benefit while simultaneously claiming on tax returns that it was for charitable purposes. The fourth category examines compensation arrangements that prosecutors say violate non-profit regulations prohibiting excessive executive compensation and personal benefit transactions. Harry and Meghan don't draw salaries from Archewell Foundation, which on the surface appears appropriate for high-net-worth individuals running charitable organizations. But investigators discovered that Archewell pays substantial fees to business entities that Harry and Meghan control, creating indirect compensation that achieves the same financial result while avoiding disclosure requirements. Archewell's tax returns show payments totaling $843,000 in 2022 and $967,000 in 2023 to an entity called HSMS Enterprises LLC, described as management consulting fees for operational guidance and strategic planning. California Secretary of State records show that HSMS Enterprises is a Delaware limited liability company with Harry and Meghan as the sole members. The consulting fees paid by their charity went directly into their personal bank accounts. Nonprofit law allows reasonable compensation for services actually rendered. But the fees paid to HSMS Enterprises exceeded the salaries of executive directors at comparable charitable organizations by factors of 3 to 5 times. And investigators could find no documentation of what specific services were provided to justify the payments. The fifth category involves donor designation violations. Federal tax law requires charities to honor donor restrictions. If someone donates money specifically for scholarships, that money must be used for scholarships or returned to the donor. Archewell solicited donations for a program called the Archewell Audio Scholarship Fund, which promised to provide financial support to aspiring podcast producers from underrepresented communities. The foundation raised $278,000 in designated donations for this program during 2022 and 2023. Investigators examined the financial records and discovered that only $31,000 was actually distributed as scholarships. The remaining $247,000 was used for general operating expenses, including the public relations fees, travel costs, and real estate payments already described. This redirection occurred without notifying donors that their designated contributions were being used for purposes other than what they specified when making their donations. Prosecutors allege this constitutes fraud because donors were induced to contribute based on false representations about how their money would be used. The sixth category examines related party transactions that nonprofit law requires to be conducted at arm's length, with proper governance oversight. Archewell Foundation paid $156,000 in 2023 to Sunshine Sachs for public relations services. This is the same firm representing Harry and Meghan personally, creating an obvious conflict of interest that requires special board oversight. The Foundation's board of directors consists of 5 members, Harry, Meghan, and 3 individuals, who investigators determined are personal friends with long-standing social relationships. Board meeting minutes subpoenaed by investigators show that related party transactions were approved without members recusing themselves, without independent valuation of whether fees were reasonable, and without evidence that alternative service providers were considered. This failure to follow proper governance procedures for conflict of interest transactions violates both California nonprofit law and federal tax regulations. Prosecutors will argue it demonstrates that the board existed only on paper rather than providing actual oversight. If you're still with me at this point, you clearly want to understand not just what happened, but what it means for the people involved, and for the broader questions about accountability that this case raises. Subscribe if you haven't already, because the legal proceedings will generate new information over weeks and months as motions get filed and evidence gets disclosed through discovery. Like this video if analysis grounded in court documents rather than speculation is valuable to you. And tell me in the comments whether you think these charges will actually result in convictions, or whether high-profile defendants with expensive legal teams will find ways to avoid serious consequences. The seventh category involves false statements on tax returns that constitute separate criminal violations beyond the underlying tax evasion. Form 990 requires nonprofit organizations to answer specific yes or no questions about their operations. Providing false answers constitutes a separate crime under Section 7206. Archewell's 2022 tax return answered no to the question about whether any foundation assets were used for personal purposes. Investigators say this is demonstrably false, given the evidence about the Montecito property, the luxury purchases, and the vacation travel charged to foundation accounts. The return answered no to the question about whether any officer, director, or key employee received compensation from a related organization. Investigators say this is false because Harry and Meghan received payments through HSMS Enterprises. The return answered yes to the question about whether the foundation maintained written conflict of interest policies and whether those policies were enforced. Investigators could find no documentation of any such policies existing in written form or any evidence of enforcement procedures being followed. Each false answer on a federal tax return is a separate felony carrying up to 3 years in prison. When you combine multiple false statements across multiple years of returns, the charges accumulate quickly. The eighth and final category involves cover-up actions that occurred after the audit began, which prosecutors say demonstrate consciousness of guilt and criminal intent. In April 2024, approximately 1 month after receiving the initial audit notice, Archewell suddenly transferred $1,800,000 from foundation accounts to accounts controlled by Harry and Meghan personally. The transfer was described as repayment of loans the couple had made to the foundation during its startup phase. Investigators examining earlier financial records could find no documentation of any loans being made, no promissory notes establishing loan terms, no board minutes approving borrowing arrangements, no interest payments being made on the alleged debt. The timing of this transfer, occurring immediately after audit notice and moving foundation assets beyond IRS reach, strongly suggests an attempt to hide money before investigators could freeze accounts. Similarly, investigators discovered that email accounts were purged in May 2024, with messages older than 90 days being permanently deleted. This occurred despite standard non-profit practice of maintaining email archives for 7 years. The deletion happened after Archewell's attorneys were informed that investigators would be seeking electronic communications, suggesting deliberate destruction of evidence. Now let's talk about consequences, because federal tax fraud cases carry implications that extend well beyond the immediate criminal penalties. The criminal exposure under Section 7201 requires prosecutors to prove 3 elements: the existence of a tax deficiency, an affirmative act constituting evasion, and willfulness. The IRS audit established the tax deficiency at $6.3 million, representing charitable deductions that were claimed, but that investigators determined were not legitimate because the donated funds were misused. The affirmative acts include the false tax return statements, the phantom program reporting, and the transfer of assets after the audit notice. Willfulness will be established through communications evidence, showing that Harry and Meghan discussed structuring transactions to avoid scrutiny, and through the pattern of conduct that prosecutors will argue demonstrates knowing violation rather than innocent error. Federal sentencing guidelines for tax evasion consider the amount of loss. $6.3 million in tax deficiency places this case in the 15 to 21-month imprisonment range before adjustments for aggravating or mitigating factors. But multiple counts and the sophisticated nature of the scheme could increase that range substantially. Beyond criminal exposure, the civil tax liability includes not only the $6.3 million in unpaid taxes, but also substantial penalties for fraud. Section 6663 imposes a 75% penalty on any underpayment attributable to fraud, which adds another $4.7 million to the amount owed. Interest compounds daily at the federal short-term rate plus 3 percentage points, currently totaling approximately 8% annually. The total civil liability, including tax, fraud penalties, and interest, now exceeds $13 million and continues growing by approximately $3,000 per day until paid. For Harry specifically, the immigration implications could prove more consequential than the tax charges themselves. Harry entered the United States on a visa that requires compliance with all federal and state laws. Conviction of tax evasion constitutes a crime involving moral turpitude that triggers mandatory deportation proceedings under Section 237 of the Immigration and Nationality Act. Unlike discretionary deportation, where immigration judges can balance factors, conviction of fraud crimes creates automatic removability with no judicial discretion to excuse the violation. Harry would be barred from returning to the United States for at least 10 years, following deportation and possibly permanently. The immigration consequences apply equally to visa holders and green card holders. Even if Harry has obtained permanent residence, the fraud conviction would still trigger removal proceedings. Meghan, as a United States citizen, faces no deportation risk, but this creates the possibility that criminal conviction will physically separate her from her husband through forced deportation. 3 scenarios exist for how this proceeds, each with different implications. The first scenario involves a negotiated plea agreement where Harry and Meghan plead guilty to reduced charges in exchange for avoiding trial. Prosecutors would likely accept guilty pleas to 2 or 3 counts rather than all 14, with agreed sentencing recommendations of probation, home confinement, or minimal prison time measured in months rather than years. The couple would be required to pay the full civil tax liability of $13 million plus additional criminal fines. They would be required to dissolve Archewell Foundation and cooperate with asset recovery. For Harry, the guilty plea to fraud crimes would trigger deportation proceedings, though the negotiated nature might create some possibility of discretionary relief. This scenario is moderately likely because it provides certainty and avoids trial risk, but it requires admitting criminal conduct and accepting immigration consequences that Harry may be unwilling to accept. The second scenario involves aggressive legal defense attempting to suppress evidence and challenge charges on technical grounds. The defense would file motions arguing that the audit was pretextual, that communications between spouses are protected by marital privilege, that the asset seizure violated due process, and that the government lacks evidence of willful intent. This approach could succeed in suppressing some evidence or getting certain counts dismissed. But federal prosecutors typically bring cases only when evidence is overwhelming, and the documentary nature of tax fraud makes suppression arguments difficult. This scenario involves at least 18 months of pre-trial litigation before a trial lasting 4 to 6 weeks, during which the asset freeze remains in place and legal fees consume millions of dollars. The third scenario involves complete financial collapse, where Harry and Meghan lack resources to pay the $13 million civil liability or the mounting legal fees. The Montecito mansion would be seized through IRS liens and sold to satisfy the tax debt. Future income would be garnished at the maximum rate of 25%. They would be forced to declare bankruptcy, which does not discharge tax liabilities but eliminates other debts. This scenario is increasingly probable because the asset freeze prevents them from accessing foundation money they may have planned to use for legal defense, and their legitimate income from commercial ventures has proven far less substantial than initial contracts suggested. One final dimension deserves attention before we conclude. This case will be prosecuted in public, with every filing, every motion, every piece of evidence becoming part of a permanent record that affects not just legal outcomes, but reputational consequences that extend across every dimension of their public lives. Subscribe for continued coverage as this case moves through the federal court system. Like this video if detailed legal analysis based on actual court documents is what you value. And share your perspective in the comments on whether you think justice will be served here or whether wealth and celebrity will produce outcomes unavailable to ordinary defendants. Because the charges are filed, the assets are frozen, the case is moving forward, and the consequences, legal and otherwise, are only beginning to become visible. Stay informed. This matters beyond one family's legal troubles.